Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and the bulls are doing to the bears what they've done to the bears so many times. As we go ahead and we break over the 88.75 old all-time highs, we make new all-time highs. You've got the upper band there that's just riding along, not quite engaged with price. And that tells me that we've got more to go on the upside, that we likely will push through either today or maybe into Tuesday. Remember, we're closed on Monday, and make a new high that touches or moves through that upper band. At that point, then the market has to decide whether it wants to go on a ride of that band or if it wants to go ahead and pull back. The Bollinger bandwidth is not completely outlandish. It's at 5.23. So the bands certainly aren't tight, and they haven't really been tight. During this period of consolidation, the lowest they ever really got was, right around, 4.5 to 4. So you haven't seen that true low range day compression that I personally really like to see in order to get on board of a band ride. And I think that lack of compression and the very large range days that we've had, both on the way down and on the way up, have made this a very difficult rally to catch, a very difficult rally to hold, and a difficult rally to really get behind in the later stages. So you're seeing a lot of people now playing catch up, especially in these last 3 days after the little 2-day pullback and the move higher. So, for my part, we're just going to keep trading things intraday. I have a very small short trade that I have been starting to put on because it's my belief that through the first, through the spring, that we are going to go back and retest some of these lower areas, that this is not a true 2013 bull market kind of a deal. That said, there's no reason why you can't be long intraday or even overnight and do very well. I had an 81 long that I just took off a little bit ago, and if we continue to make higher lows like that, those higher lows are all buying opportunities. Don't get yourself wrapped up into some type, especially if you only have one trading account. Don't get yourself wrapped up into some kind of ideology that the market is up X number of handles, so the market has to come back down. Because it really doesn't. We had a good dip here. The bears had their chance back in October to turn this into a macro bear market and kill the uptrend for good. Didn't happen. We did a full V back up to new highs, and we have made some higher lows as we go. Now, late part of 2014 and all of 2015 has been very two-sided and very sloppy. But at this point, you have to wonder whether we've gone ahead and we've made kind of a matching low there off to new highs, and you have to respect that. So, like I said, no ideologies, just trade it. We're making higher lows, and those higher lows are yielding higher highs, and that is something that you want to be long. Whether we ultimately reverse and come back down, of course we will. We always do. But don't lock yourself into that. When that happens, there'll be plenty of time to get short and take advantage of a down move. Okay, everybody have a great day. Have a great 3-day weekend. I'll be back Tuesday morning with another webcast. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come sign up for the chat room. Trade them well, everybody.